Again, AUD USD. One trade was at 7th October, which we already spoke in the previous video. And this trade on the 2nd October, I took and it went break even because I moved the stop loss. So the reason for that would be fib smaller than 50% fib, which caused a small confidence in this trade, although it would probably be profitable. So it was more like a range trading and a distorted fib. Actually, there was a good engulfing candle, so it had a high chance to succeed. Another trade on Euro USD, 1st October. So I see similarities already. There was the volume profile was already there, and from what I can see, yeah, trying to trade from a fib above 50% retracement, trying to long it, which could probably be reasonable due to this like support, I would say. But looking at this price action falling down, like disrespecting the support, would actually mean that probably we have to look at something else. And the P-shape volume profile suggesting that the weight is placed above, so the big players are accumulating in this range. Well, wait, I did shorted it, so okay, so this was a good play actually. Probably the entry could be a little bit lower. So if I intended to short it, I should be shorting it from slightly higher points, because still in this range it would be like range trading and scalping. So I could scalp it here to the upside, here to the downside. It would probably get stopped out over there, and so accordingly here I should be longing it. Although I understand that this candle, opposite direction candle, it was more like a volume profile trading. So this is a POC, this is VAR, this is VAL, or this is VAL, and this is VAR. So VAL, VAL. Therefore, the intention was good. I was probably studying the volume profiles back then, because I noticed that something is odd with the fib retracement sometimes. And therefore, this was almost good trade, stopped out by the wick. Continuation of a downtrend targeted. Yeah. So, yeah. It was a downtrend, so I had intention to trade at downsides. And again, the signals could be like distorted fib, like above 50, or even taking another fib from that side, and it was 61.8. Sometimes a little bit disrespected, 61.8. So I guess taking the fib from both sides when we suspect the market to trade in other direction would be beneficial. I don't know if I recorded that because I was recording for TradingView at the same time, and this is causing a little bit confusion. So again, entering on this candle was premature because there was no fib confirmation, no structure supporting the idea going short yet. But here a fib has been printed with a level 61.8 and then engulfing candle, and there was a very good entry with a very good stop loss placement would be possible, and this would be a winning trade, although it would require to wait a whole day, so it would require going to sleep and then looking at this position again. Let's focus on this study case with GBP AUD. I've noticed that I was trying to short it, which was actually the right approach in this kind of market. So this market was trending a little bit downwards, so it would be appropriate to look for shorts. Although if that's the case, then I wasn't looking at this fib, but I was looking at that fib. And let's flip the chart. So if we flip the chart, then RSI is not being flipped. I don't know why we cannot flip RSI. Anyway, so in this case, the entry it still would be appropriate to short it, because this is a direction low, high, so it still would be appropriate to short it. But the structure of this fib is not something ideal. So we have price below 61.8, and the 29.2 was respected. So some kind of consolidation should be expected, and not a immediate response to that level. And as you can see, simply looking at the fib and evaluating if the golden zone is treated appropriately or not could have spare you from entering a trade that would be a losing trade, or that would simply trap you for a while, falling a victim of a daily fees for opening a position. So if that's a issue, 6 days in consolidation, and then breakout, it would be probably appropriate to look at the at the volume profile. Well, that's strange. It's a P shape volume profile. Why am I saying P shape? Because the pulse is upstairs. So if it's a P shape profile, then we clearly have price falling down, but it doesn't help actually to look at this like that. Let's study it a little bit more. Right now it's only a bigger P. I guess just looking at the fib retracement is had more priority than looking at volume profile, because it doesn't bring me clarity to look at this volume profile at all. It just complicates the stuff a little bit more. So simply, we have not a perfect fib. It means there are going to be problems. The trade could go in a direction, but there are going to be problems ahead. And you know, this flip the chart. So this is the 5th point of my strategy. So up only approach. It's better for the brain to just observe growing market instead of always a declining market. It's more natural for a human to observe a growth. Actually, for me personally, therefore, like, I find it, at least in my personal case, that every time I look at the declining chart and I see something like this, then I expect it to reverse. And when I look at this like that, then I do not expect it to reverse downwards. Although I tend to think, okay, we have some kind of consolidation. It's not going to reverse because, humans are in nature optimistic, I would say, in their own way. Everybody in their own way optimistic. GBP USD, trying to short it again, but the chart is flipped. So looking at this, when the chart is flipped, I tend to focus on this kind of retracement, on this. But when we do flip it, then it doesn't even come to mind to focus on this area. Instead, I'm focusing on this. So this kind of retracement. I can see that I took a volume profile measurement from there. So we were in 5061.8 zone. Let's get rid of some paintings. Let's switch it to something more aesthetical. This is also a good indication of that move. And this one is falsely taken. It should be like that. So I can see that the price, the candle size flow is not that good. Price is slow. one candle doesn't bring much difference to the market. Every 1 hour candle is very slow. Then it suddenly starts to speed up. But then it slowed down again, and we slowly retraced, climbed down. This is not a like natural condition of the market. So expecting it to just shoot up, or in this case down, now flipping the chart is a necessity. Expecting it to just shoot, it's not something that I would do personally. Therefore, but I did it. And like if we measure the volume profile like in the correct way, then I would say we would have to go probably from where we started measuring our fib. And okay, does it says anything like a B shape or a D shape? So I would say it's a P shape profile over there, and this is like if we take it like that, we have to understand that this volume profile comes from there. The middle volume profile comes from this place, and the beginning of this profile comes from there. So a P-shape profile, and the P-shape profile honestly, I don't like the volume profiles here, because if we look at this like that, then we have again, and then now we have a B-shaped profile, which would actually suggest going upwards, but we did went upwards, but not in a immediate term, and what we are interested in is immediate term. But over here we have a P shape, over there we have a B shape. If we look at this, then this is overcomplicating. I don't like this volume profiles. I think I'm gonna skip those, because if we look simply at the price action, and the size of the candles, at the enthusiasm with which the candles are moving and reacting from certain places, it's non-existent. So given that, it would be more natural to expect price dropping instead of not dropping, but going short, or in this case going long, going short on this, going long on this. You see, sometimes it doesn't work, and that's it. Again, GBP USD, from what I can see, I was trying to take this short twice, and once it failed, and for the second time it also failed, and then I capitulated and didn't try to catch it again. At this point, I was probably thinking that it's very probable for the for the price to actually reverse, and then we are gonna see some shift in the bullish direction, because we were at the 88.6 fib, but instead we seen a slow decline, just a little bit over the previous swing low, and for the second time another swing high, and market continued to trend in a downtrend. So we have to just be more patient, and actually, having a small capital, you have to trade like this. You have to take like small chunk of the market, but it doesn't justify you not knowing the market structure, the candle flow size ratio, and overall like rules with Fibonacci retracement, because it's not simple. Like paying attention to the details actually counts. USDCHF. I was looking at this without fib retracement for a while, and I thought, damn, this is not that easy. This is not going to be that easy. But as soon as I marked a fib retracement on this, I noticed simple stuff. So this was like less than 50% retracement, and price reacted strongly to 29.2. Therefore, like, just because it bounced from 50, it wasn't a sufficient reason to go long on this, although the direction would be correct given the trend. No, actually not. Yeah, something was shifting there, but given the trend, like the short-term trend, it was a good bias. It was a bullish bias. So swing trade, it was a bullish bias. Day trade, it was also a bullish bias. But this was a huge thing to skip, and it caused this trade to be a losing trade. I'm trying to make something out of volume profiles still. I haven't found yet a good method to simply use the volume profiles. But I think it's actually better than the normal volume. It's more intuitive in a way. So simply this one particular lack of confluence would suggest there is going to be something off. Expect this fib to give you opportunity to short, not long. Yeah. GBPCHF. This is starting to get sentimental almost. So I was trying to long it in a short, in a bullish market like this, counting on some pivotal point, probably. And quite stupid thing to do. What I would say, it wasn't, if this was a perfect fit, okay, then probably after this kind of like stagnation, ranging market, I would say, okay, there's a high chance we're gonna see some reversal, but this wasn't the perfect fit. Additionally, it wasn't even a 61.8 fib. Only a wick touched it. Actually, no reason to go long from here. To make it even more stupid, I can flip the chart, and from there you can see like no, it was a wishful trading, calling the top or calling the bottom. Very stupid, a stupid mistake. Should be avoided. No reason actually to enter this one. This together, and let's analyze it together. So I've been trying to long Euro USD on 18th September. And why longing it if there was immediately a... Oh, I see. So I was most certainly looking at some larger scale fib. So looking at this as we should. So to the most extreme point where the price was, so at the wick of the candle. So this is our Fibonacci retracement. And let's actually get rid of those heavy triangles. What is the range of this? Oh, it goes far away. Far, far away. No, where does it go? Here. Okay, let's just make it like that. And let's make it our row size 20. It looks a lot more aesthetical right now. So we had a reaction at in the golden zone, but there wasn't actually a good candle entry, because the size flow ratio of the candles was not good. It was nice try to simply trying to convince the traders that this is actually a good fib, but it wasn't, because there wasn't the candle should be, if the last candle in the bearish retracement was like this, then we should have this big candle for a bullish entry, but it wasn't there. So actually there was no confirmation to enter, and I entered without a proper confirmation. So entering without a proper confirmation. And if we look at the trend, and the trend line, it was actually the right approach to enter. So this trade was a tricky trade. Should be more mindful. I should be more mindful and looking for proper confirmation and pay more attention to candle size flow ratio. And for some reason, the price bounced from a VAL to VHL or VAL. Yeah, VAL. I should be probably making this more less transparent. Then we would probably be more informed. So if the golden zone fails, then we can only count on volume profile. So POC or VAL or VH, something with H at the end. I'm sorry. So the case study is such that the trend continued, and then it what is this? A huge black zone, almost huge black level, and the price reacted from it. Yeah, a previous high. Let's make it a little bit smaller. And besides previous high, there was also a level 50 of this current retracement, and that's why the price dropped. So because the 61.8 wasn't respected, then the price changed instead of continuing the trend. I remember I had my theory with blue. Let's measure it again. With black triangle, with gray triangle, and with blue triangles. And the blue triangle, if I'm not wrong, it was 88.6. But instead of blue triangle, I also like to flip the fib in the wrong way, measuring in the wrong way, and then you had this 29.2 level, which was also as you can see, it's the same as 61.8, but this is a reverse, like, mirrored. No, it's not the same. It's not the same, but it's close to it. So I had my theory with the triangles, and I think I get it now. So the most important is anyway 61.8. This is a basis. If we had any distortions from that, it means that there's not going to be a easy continuation upwards, but we should be looking for some reversals, and that's it. I'm not going to teach and even use myself that kind of fibs with blue triangles and so, because it was only a visual help for me to actually remember what type of the movements are in the market, and Actually, this is the last example. So I'm gonna study a little bit more because I have few more losing trades to analyze, and it's going to get more sentimental. And after I finish all losing trades, I'm gonna switch to winning trades, which is going to be also very interesting. But I want to catch all the patterns with my losing trades so that I can avoid in the future losing trades and make myself more profitable in my trading journey. So I wish you all good. Thank you for watching. And you can, if you are on YouTube or TradingView, then you can switch from YouTube to TradingView because I'm posting those videos on YouTube as well. And thank you for watching.